What's up, everyone? Welcome to the second ever episode of the WTF Report. For those of you who are new here, the WTF Report stands for the What's Trending in Finance Report. This report brings you the latest news, updates on industries, and updates on stocks that happened in the prior week. And for those of you who are here from the last episode, thank you again and welcome back. So this week we had a market rally, we had a market correction, we had some classic USA-China tension, we had some interesting investments from the Saudi Foreign Investment Fund, and we also have a potential cure for coronavirus. Who knows? Without further ado, my name is Ayan with AQ Markets, and welcome to the WTF Report. So let's start off with an overall market summary. The Dow went up 40 basis points this week. The S&P 500 was up 75 basis points this week. Additionally, we had 2.4 million people more apply for unemployment, which brings our grand total to 38 million. But apparently nothing affects these markets, even 38 million unemployed Americans, but that's besides the point. We also had a pretty volatile trading week. It all started off with some rallying early on Monday and Tuesday, and that was due to two different things. The first thing was that Jerome Powell gave a statement addressing the United States saying that the Fed is far from being out of ammunition to keep this economy alive, which pretty good sign. Basically, he didn't launch his bazooka yet. He still has a whole slew of weapons and missiles to keep this economy alive. Additionally, we had some really positive news from Moderna come out, the pharmaceutical company. They did some antibody research for coronavirus, and it turns out that when they were doing the phase 1 trials for the vaccines, a lot of their patients were showing a positive response, aka they were creating these antibodies that would help fight coronavirus. So these phase 1 results that came out brought a huge rally in the market because people are now thinking like, okay, we're closer and closer to creating a vaccine and putting this all in the past. With that news, Moderna's stock skyrocketed Monday morning. It went up around 20%, but then the following day, people started to become a little more skeptic, and it's great to be skeptical. You can't just hear things on the news and believe it. You have to do the due diligence. You have to fact check it. So people were a little skeptic about their data and whether it was like 100% accurate or not. So they kind of tapered off. They ended the week doing not so hot. So if you sold on Monday, good job. If you held it, I'm sorry. But this also kind of caused more effects on the broader market. That's why the overall market, the Dow Jones and the S&P 500, also tapered off because the virus fears kind of came back and set a little bit back in. We're still unsure whether this vaccine is going to be 100% successful, but people also just want to be more pragmatic. They don't want to hop on the first good news and then ride that and then get really disappointed. So I think that this was overall a good response to it. Additionally, to add to the volatility, most, if not all, of the 50 states have reopened their economies, obviously with some restrictions. So, for example, restaurants are operating between 25 to 50% capacity, depending on the region. And big companies are slowly bringing their workers in, not everyone at one go. So they're taking proper measures. This is a really good indicator that our economy is going to come back. And hopefully this will do something about the joblessness numbers. As I mentioned before, we're at 38 million unemployed Americans. So hopefully as these businesses open back up, the ones that are still surviving and standing, hopefully they can re-employ those people and lower our number because we're at a pretty unprecedented number that is very concerning in the broader market. Now the thing that really just puts the cherry on top of this volatile week was we have some more China-USA tensions. So the government, the House and Senate to be specific, they're in the works of creating a bill that would delist foreign companies that have strong foreign government influence. Obviously, their target with this was China, so it's being labeled as like the, delisting Chinese stocks, but it's actually any foreign stock that has a big foreign influence on it. And this had to do a lot with distrust. The main reason this happened was just because of the overall USA-China tensions about the origins of COVID-19 and whether they could have done a better job. And then we also have a trade war that went even 2-3 years prior to that. And then there was also a really good case example of fraud that happened in one of the Chinese listed companies, and that is Luckin Coffee. If you've been following Luckin Coffee, they basically, too long didn't read, they falsified $310 million in revenue. And they were basically presenting this information. This company was listed in the United States on one of our exchanges, and we had a lot of US investors that were exposed to it. They were doing really well until we found out that they lied. As you can see from this chart, this is what happens when you commit fraud. You lose 96% of your value. So this opened the door to a lot of fact-checking and auditing, and since some of these companies that are issued in China don't follow by the United States accounting principles, it's really difficult to tell whether these companies are committing fraud or not. So to avoid that, the United States is considering just completely delisting any companies that aren't going to follow the United States rules, basically. One of the stocks that was most talked about because of these tensions was actually Alibaba. As you guys know, Alibaba is the equivalent of Amazon in Asia. The founder, Jack Ma, is very well spoken. He frequently appears in the media. He's known for his philanthropy and charity. So this stock was they gave a bit more of a pushback, stating that they have abided by the United States accounting principles for years. They've generated great returns for US investors over time, so they don't believe it's fair for them to do this. And if this were to go through, they're hoping that they could be one of the exceptions that would remain listed in the United States. So we're going to see how that develops over time. So aside from all that market volatility, we also had some interesting investments take place. The Saudi Sovereign Investment Fund took very major holdings in Facebook, Disney, Bank of America, Citigroup, and Cisco, which is really interesting because with markets being so down as they are from their February highs, there's been a lot of big asset managers that are trying to figure out what deals they could scoop up. And on the flip side, with Warren Buffett also selling his airline stocks recently, he also recently dumped his Goldman Sachs shares, which is very interesting. He even stated himself that Goldman Sachs was the first stock that he ever bought as a kid. I believe he was 11 years old. And he's been a big proponent of them. He actually assisted in bailing them out in the 2008 financial crisis. So it's really interesting to see how Warren Buffett, the greatest investor of all time, is even letting go of stocks that he has held for so long and supported for so long. And you could basically, I'm just going to say that he's hibernating. I think he's going to be sitting on some cash. He doesn't really need to be making any more money, so he's going to be okay with missing any opportunity costs throughout this year. But he's waiting for the perfect time. And if anyone knows how to time the market better than the other guy, it's Warren Buffett. At the end of the day, he could be wrong. No one really knows, but he's got nothing to prove. The guy has over $100 billion. Moving on into some industry and stock-related news, the airline industry actually had a pretty good week. The Jets ETF was up over 6%, and that just comes from the fact that things are looking a little bit better. As we saw in March and April, there was about 90% cancellation in flights, so they were operating at about 10% capacity in their planes. It recently showed that in May, they're operating around 25% capacity. So, it's a little bit better, and with all 50 states opening back up again, this could pose a lot more potential for traveling in about a month or two, so they won't be hemorrhaging as much cash as they were before, which, again, when this first started, people thought airlines were just closed for the remainder of the year, so they had a pretty modest rally this year. In my previous video, I also discussed how that the overall sentiment on American Airlines is that they're going to go bankrupt. I had a video talking about their liquidity position and their history, so you should check that out if you haven't already. And the executive team actually put out a statement on Wednesday saying that bankruptcy is not going to happen. It shouldn't be on the table, so quit talking about it. Obviously, it's their job to support the company, so that isn't really 100% indicative that they're out of the water. But it's really interesting to see how the management immediately responded to these allegations that happened on Monday. In other news, Spotify effectively bought Joe Rogan. Joe Rogan is known for his really crazy, high-viewing, long, just ridiculous podcasts. He's had Alex Jones on there. He's had Elon Musk a few times. So he brings in a lot of attention. And he used to be posted on YouTube for everyone to watch, but Spotify actually created a over $100 million deal for him to basically be the exclusive provider of his content on Spotify alone. That doesn't mean that they're going to have creative control as well. So Joe Rogan made that very clear that he's still going to be the one that's going to be writing everything down, bringing his guests, saying whatever the heck he wants. So there's going to be no strings attached. Just basically the streaming is only going to be allowed on Spotify. I'm unsure whether everything from YouTube prior to this date is going to be removed, but it most likely might happen. So this could show a lot more promise into Spotify as they enter the acquisition of various podcasts and original podcasts, as a matter of fact, because podcasts are becoming a really, really popular thing as people are commuting from work and home, not during coronavirus, but prior to that and hopefully back in the future. More people are listening to podcasts than they are listening to music. So Spotify is trying to position themselves to really capitalize on that situation. Facebook also announced a new division of their app/website. It's going to be called Facebook Shops. And it effectively is going to be their version of e-commerce. And what it's going to allow is for small businesses to provide their goods and services in the form of like a website similar to Amazon or eBay where they can sell their goods and services. I personally think this is an awesome opportunity because if anyone's ever advertised with Facebook before, they generally, one, specifically target a specific audience, but then along with that, they also will show your advertisements more so locally as opposed to just random people all around the world, which helps a lot. So this is going to be a great opportunity for small businesses to grow, especially the local ones, the mom and pop shops. And overall, it's going to be really interesting how this plays out. It's uncertain whether they're going to be launching this year. I believe that that's their target, but this could take away a lot of business from Amazon and a lot of other e-commerce sites. So it should be interesting to see how they develop into this space, how much market share they take away, and what the overall disruption is going to be. But I think it's going to be great for small businesses and for individuals that have their goods and services to offer. Thus concludes this week's WTF report. Thank you so much for watching. I hope this brought a lot of light on the volatility that happened this week and also kind of gave a little bit of an inkling on what the newest USA-Chinese tensions are all about. I'm thinking about making a video specifically on that topic and deep diving into what would happen if these companies were actually delisted, what would happen if you're a shareholder, and what the overall impact on this market could be. As always, thank you so much for watching. Don't forget to like, comment, and subscribe. If this weekly show is something you really are interested in, then hit the bell notification so that it notifies you when the next one's up. Until next time, I'll see you guys later. Thank you.